Hey traders, welcome to this brand new series. I have taken my first trade, a Canadian dollar Swiss franc long position. Let's bring up the chart. So Canadian dollar Swiss franc. If we look at the daily time frame here, nice clear market structure showing obvious lower highs, lower lows, prices downtrending. The moving averages are bearish, they're steady, prices below those moving averages. Very clear downtrend. On the weekly, very strong bearish move down. On the monthly, once again, clear market structure that's showing obvious downside momentum. Price is downtrending. So why have I gone long? This is the first trade of this series. Why have I gone long when price is downtrending? It's all to do with market momentum. If we were to use fundamental analysis to analyze Canadian dollar Swiss franc and decide our market direction, there's no way we would be looking to go long. There's no reason whatsoever, really, from a fundamental point of view, to go short the Swiss franc, to go long Canadian dollar Swiss franc. The reason being, it's a safe haven currency. There's recession, global recession potentially coming. Money is moving to the Swiss franc, and even though we could see a retrace move long term, I think this thing's going to continue to downtrend because the market responds very strongly to fear and not as strongly when things are going economically better. So if you look at the Canadian dollar Swiss franc, anytime there's some sort of global worry, COVID, recession, banking crisis, money will flood to safe havens very quickly, but it won't come out of those safe havens as quickly. So you get these strong moves down and it creates these very clear downtrends. And the Canadian dollar Swiss franc, has been downtrending since 2007, since the global financial crisis. So why have I gone long? It's all to do with momentum. So the first thing we're going to focus on is my directional analysis. Which direction do I think price is likely to go in future? Even though price is downtrending, I think it could start uptrending or at least see some decent upside. So this is a counter trend trade. I don't take these very often. I'm not trading with the trend. The trend is your friend, absolutely. But this is a counter trend trade. Let's focus on that analysis and let me share with you why I think the momentum is shifting and why we could see this thing start moving up. So the first thing I always look at when deciding price direction or market momentum are the swing highs and the swing lows, so the market structure. And I'm looking at these swing highs and swing lows, and I think they look something like this. Once we've identified that, the next thing to look at is, what is the space between each swing high? Is there a nice bit of space, a nice gap here, or are those gaps getting tighter, or is there no gap, or the swing highs very similar? Because what that shows is the buying momentum each time we have a retrace move. So we come down, we retrace, we come down, we retrace, we come down, we retrace. Now the size of these retrace moves is a good indication of the potential upside momentum. How many buyers are coming into the market? How many people are closing their short positions? So if we look at the swing highs here, there's a nice big gap between these two swing highs, which looks really good. There's probably actually a better tool that I could use. Let's have a look here. Okay, let's do these rectangles. So we have a big gap here. We then have another gap just here. And then you can see as I'm drawing these things that these gaps should start getting tighter. So these are all very similar. Up to this point, things look pretty good. We then have a much tighter gap. So the gap between this swing high and this swing high is definitely tighter than these previous ones. And then the last one is very tight. So the most recent swing high is very similar to the swing high previous. That's a good indication that there could be more buying momentum than there was previously, that the momentum could be shifting, that the downside, the bearish power, whatever you want to call it, is not as strong as it once was, and that's clearly shown here by the swing highs. Now you can do the same with the swing lows. So if we were to mark swing lows, so let's make this a different color, shall we? Let's just do this green. Okay, so there's a very tight gap here, but overall things look okay until here. So with these swing lows with this very tight gap, there was one here as well, but very tight gap. So once again, things are getting quite tight. The bears are not able to push price down as much as they once were. So that's one way to look at this. Generally what happens when you get very similar swing highs is you get a potential range. You might get like a range form, or you might get a pattern, like a head and shoulder pattern, a double bottom, double top, something like that. Now I actually did take a trade earlier this month, or it might have been back in March, it's currently in end of April, based on a potential range support. Price still might range, but that trade didn't work out. But I'm willing to give this another go. So potentially, because these swing highs are very similar, we could have a shift of momentum. Things might become bullish, or definitely more bullish than they have been. Another way to gauge the momentum and decide the direction of price is the moving averages. First of all, what direction are the moving averages moving? Well, they were very bearish here. More recently, though, they're not as bearish. So once again, this is an indication of momentum. Are the moving averages really moving down? Are they on a slight decline? Are they in a free fall? These things can signal and help suggest where the momentum is. So we look at this over the last 12 or 13 years. Moving averages were definitely bearish over here, but more recently they are getting more of a sideways direction. Another way to use these moving averages is the space between these moving averages. So a nice clear gap that's fairly consistent throughout this decade, but more recently they're getting tighter. So once again, this can indicate a shift in momentum, that things were very bearish over here and not so much anymore. Another thing to look at is where price is relative to the moving averages. So if price is always clearly below the moving averages, that's an indication that things could continue to be bearish. But you can see here we actually broke above the moving averages. Once again, that could signal that things might be shifting, that this downtrend might be becoming an uptrend, or at least this downtrend is coming to an end and we could see the market range or become indecisive or something like that. So I've said quite a bit. That's my reasoning behind it. I think the momentum is shifting. I have been looking for long opportunities the last couple of months. I did have a trade last month which didn't work out. I'm willing to give this another go. So why have I gone long? So that's the analysis. What is the entry behind this trade? So for my entry, I always scale down to lower time frames. So if we look at the weekly time frame here, if my RSI loads, here we go. On the RSI, we're starting to reach oversold territory, so that can signal that, you know, things could reverse. You know, if we look at the RSI, we kind of near or reach that territory, and then the market generally does reverse. So we're hitting oversold. That's not enough by itself. Something else that I was looking at is the size of this move. So this move down here on the weekly, and if we compare that to other recent big sell-offs, I think they're of similar size. And what you tend to find is markets and currency pairs seem to have a memory. You know, if you look at the size of swings and retrace moves, let's look at these swings here, they're generally of similar size. And markets tend to have this memory. You know, look at the downtrend here, look at the size of this swing, the retrace move, the size of the swing, the retrace move. It's all very similar. So markets tend to have this memory, and I think judging by the size of this move, we could be due a retrace move. If we look at the daily, once again with this RSI signal, we had this pin bar that's closed on the daily. That by itself is not enough, but combining that with the weekly and the RSIs and some other things I'm going to go through in a moment, you start to get this picture where actually I think price might be starting to reverse. This could be a good time to enter. I went long on the 4 hour. Once again, we have this RSI signal very oversold here on the RSI, but the real reason I got into this trade was the market was in a free fall here. And what tends to happen is when price has been moving down for a long period of time, you then get this free fall. And sometimes it's hard to look and spot this with historical information into historical charts. If we were watching this move live, you would have seen this was very sharp, very quick. And that's generally how markets reverse. If we zoom out here and go back to some other big moves, you know, we come down and then there's like this free fall move. These are not the best examples. So we can find, so one like here, we're coming down, there's this free fall move, and that generally is the start of price reversing. And you see that on all time frames. You know, if we try and find a big move on one of these other time frames. So once again, we come down, free fall move. Let's go back here. This is like this free fall move, just price is just plummeting. That's generally an indication to get on. There's like this last push, which is extremely volatile, very quick. It's like the market is flushing out any potential buyers, and then it starts to reverse. And you get the same with an uptrend. So if price is really moving up, what can happen is, if it's moving up far too quickly, you generally get like this last strong move up, and then things reverse. I'm not really finding any examples of that. But anyway, I'm not explaining this too well, am I? On the 4 hour, there's this free fall move here. You know, if we look at the size of this candle compared to other previous candles, that's hopefully a good indication that this thing was really coming down very strongly. That was the signal to buy. So that's where I got in. You know, as a market's falling in panic, generally creates good buying opportunities if you have a decent sized stop loss and are willing to trade the volatility. This setup that price has formed after that free fall is what I call a correct engulfing candle. And this is a very strong buy signal. So I'm long. I expect price to move high. I'm already in profit because I got in before this setup. This setup was just a confirmation after my entry that actually things could start to move higher. So I'm long. Let's wait and see what happens here. This could be another losing trade. I want to keep adding to this position. You know, what I want to see is a move up, some sort of retrace move. I'll get long again or into a second position, and hopefully we'll just see this thing uptrend, and I'll just follow the uptrend for as long as I can. With regard to closing the position, I just want to follow the trend as far as I can. Looking at the weekly time frame here, it's a very clear horizontal level around here, around 71, 72 area. If price can get there, that's likely a 50% fib retrace level. Yeah, so we've got 50% here. Retrace level, that's likely where price is going to find a decent amount of resistance. So that might be a good place to get off the trade completely, but at least close a good portion of the trade down. Because like I said, this thing could actually swing high and break these highs up here. That's what I'm hoping for anyway. But I'm getting well ahead of myself. Let's focus on this entry. Let's see if price can start trending. I can then create other videos about the exit. There is a positive swap rate holding this position. I love trading pairs with a positive swap rate. The Canadian dollar interest rate is about 4.5%. Swiss franc, the interest rate in Switzerland is 1.5%. There's a good positive swap rate. The longer this position is open, the more profitable it's going to be. I love having that positive swap rate. It's just free cash and it's free money. So I want this thing to continue. I want this trade to uptrend and uptrend for a really long time. So I don't know how long this position is going to be open, but because of that positive swap rate, there's no rush to close the position down. It's been about a week since opening Canadian dollar Swiss franc. Price has been bullish. We have a retrace move for this downtrend. Price is at a real critical area right now. We're between the moving averages here. If we are going to swing lower or attempt to swing lower, this could be where that swing lower starts. If we look back at 4-hour trends, you can see price generally reaches the moving averages or goes in between the moving averages and then it reverses. It happens over and over again. Whenever you have a trend, price reaches the moving averages and reverses at them. Here we have lots of clear examples. So it could be that my trade is premature and that this 4-hour trend is going to continue and price is just going to swing lower and continues downtrend. If that is going to happen, it's likely to happen now. It's not guaranteed. It could be that price breaks the moving averages and then comes down, but more often than not, price would reverse around this area and come back down again. So this is a real critical area for my trade. I have taken some profit on the table. You'll see that on my verified results, that I've taken some profit for Canadian dollar Swiss franc already. Not most of the trade, just a tiny slither, because I want this trade to be open for at least another 300-400 pips. I want to see a big bullish move up. Now this morning I did update my fundamental analysis and there's literally no reason to go long this pair from a fundamental point of view. I have the Canadian dollar down as a sell. There's not much good happening economically for Canada right now. There's no reason to be buying Canadian dollars. The Swiss franc I have as a buy, so I'm actually trading the opposite to what my fundamental analysis suggests I do. So we'll just wait and see. This is a trade purely based on momentum. I'm hoping for some upside. I'm hoping that Canadian dollar will change to a buy in the coming days, coming weeks, as economic indicators are released, economic data is released, and that I'm just very premature to getting on some sort of Canadian dollar upside. Price has been bearish off this sell area as covered in the previous update. I knew this was going to happen. Fundamentally, this would have been a great place to go short. So going back to the fundamental analysis and what I've said in previous updates, if we're looking to go short, this is where you wanted to get short for the next move down. My entry's down here. I'm still holding on to the trade. I'm hoping for some sort of double bottom that's going to form. If price can start finding support and we can see some upside, then potentially this could be the bottom of this 4-hour trend and price could start trending. If we break lower, then the trade will just close out at around break even. So we'll wait and see what happens with this trade, but it's not looking great. And if we were to use the same momentum analysis that we did on the monthly, weekly and daily for the 4 hour, there's nice big swings here. We're reaching the moving averages and we're coming off them. There's no break of the moving averages. The only real hope now when it comes to the analysis of price momentum is that we can't break lower and we get some sort of double bottom. Here we go again. Price has come down, look, pretty much around my entry area now. If price breaks lower, then this position will be closed for a loss. There's major US dollar news approaching in about a minute and a half, which could bring some volatility to this pair. I'm still holding onto the position and hope that we get double bottom. The price does something like this, that we can retrace off these lows here and mark an end to this downtrend. So we have about a minute to go. It's FOMC, it's an interest rate decision, an increase in rates by 0.25, 25 points is expected. The major move might come at 7:30, the Fed press conference after. But we'll wait and see what happens. This could mark the end to this trade though. We have 40 seconds to go. We'll wait and see what happens here. If we go down to a lower time frame, you can see my entry over here on the 5 minute. So it's really a break of the 65 area, just below 65. Spreads are widening. And here we go. Okay, not too much movement across the board. I'm assuming the rate was as expected. Yep, 5.25%. Not too much movement really across the board. If we go back to the 4 hour, we're still at that swing low if it's going to load up. But like I said, the real volatility might come at 7:30 in 30 minutes time. So here we go. We're still finding support down at these lows. Let's see what happens in 30 minutes with the press conference. So Canadian dollar, Swiss franc broke lower. The position was stopped out, which takes us to the pinnacle point of this video. Everything I have taught you in this video has been relevant. How we gauge momentum, the entry, the setups, the price action. It's all relevant. It's all useful. But here is the most important part of this video, and this is where a lot of you are going to turn off and lose interest because you don't want to hear this. The reason this trade failed is there was no fundamental analysis. You have to combine fundamental analysis with technical analysis in order to have decent, profitable trades with a strong win rate. You can review all the technicals, you can analyze the market using all sorts of levels and momentum and price action and moving averages and other indicators, and you will catch some good trades. But in order to have a good, strong win rate, and I would say for 90% of you to actually make money trading, you have to combine those things with fundamental analysis. This trade was purely technical and it failed. But using those technical skills that I covered in this video, combined with some sort of fundamental analysis, would highly have likely created a profitable trade, would have resulted in a decent profitable trade. Now, a lot of you won't like this for two reasons, or one of two reasons. Number one is you don't understand fundamental analysis. You think it's too confusing, so you kind of just push it away. I want to stick with technicals because that's what appeals to me, that's what seems easiest. Using fundamental analysis is just the same as technical analysis. We look at indicators to gauge where the market could be heading. It's really easy. If you can learn technical analysis, you can learn fundamental analysis too. It's really not difficult. We look at economic indicators just like you'll look at price indicators to gauge where price could go. Now, the other reason why you might not want to use fundamental analysis is that you don't believe in it. But let me tell you this, you have to believe in fundamental analysis. You have to. It's all about fundamental analysis. What's driving the market is the news. It's economic indicators. That's what drives the markets, not technical levels. Technical levels, price action are great for entering a trade, for plotting your exit area of a trade, perhaps for managing a trade, but it does not provide the direction. A lot of you struggle with trading, and a lot of you have losing trades because your direction is wrong, and the direction is provided by fundamentals, not technicals. So that draws us to the end of this video and really opens up the start of this series of where I will show you how to combine fundamental analysis, very simple fundamental analysis, with technical analysis, mainly price action, like I've gone through in this video. I will show you how to combine those things and you'll see some fantastic trades, and along the way you will learn basic fundamental analysis. So watch the next video. Please like, please subscribe, leave a comment below. Any interaction in this video helps more videos to come. Thank you so much for watching, and I'll speak to you in the next video when hopefully you'll see me combine fundamental analysis and technical analysis and take a really good trade.